Welcome. I'm Christopher Norris from North Power Mortgages, part of the Your Mortgage Your Way family. And today I'm happy to be joined by our partner from Home Equity Bank, Nicole Nixon. Welcome, Nicole.
Well, thanks, Chris. Thanks for inviting me.
Yeah, it's a pleasure to have you here. We're going to start by just going over the basics of what is, in fact, a reverse mortgage. If you could do that for us, Nicole, that would be great.
Excellent. Well, listen, though there are many misconceptions about reverse mortgages, let's just set the record straight right here to say it's simply just a loan secured against the value of your home. And it's exclusive to homeowners 55 years and older. These homeowners can access up to 55% of their home's equity, which can be quite advantageous for a variety of different reasons. And you only need to repay the loan with accrued interest when you leave the home. And most importantly, mortgage payments are optional. Chris, what are your clients looking for?
Well, Nicole, it seems to me that a lot of people are facing a lot of uncertainty as they move into retirement. And one of the biggest assets that they own is their home. So if we look at this chart here, you can see that in retirement, people rely on their savings, their RRSP, their employer pension, and their CPP and OAS, all of which is taxable as income. And when you look at a lot of Canadians, their biggest holding is their home, their primary residence. And from that, in a reverse mortgage strategy, they're able to access the equity in that home. So a reverse mortgage is a very effective way to tap into an asset class that's done extremely well in this low interest rate environment. And on the flip side, a lot of my clients are finding that the risk-free rate that they can earn on their well-earned savings is very low. A reverse mortgage allows my clients to access the equity in their home and to include their home in the asset classes that they're going to rely upon for retirement. What do they need to qualify, Nicole?
Oh, great. You make some great points there, Chris. And when it comes to qualification, at the base level, you need to be at least 55 years of age, own your own home, and your home value needs to be at least $150,000. But what I'd like to do is give you a little bit more information when it comes to our qualification. We simply run quotes and use a borrower's age, their gender, as well as other property details such as the postal codes, the city, the type of property they live in, and the expected value to determine how much equity they can access. It's important to note that the older the client, the older the borrower, the closer to that 55% maximum they can get. And I'll also add that as we are a first position lender, if there are any debt secured against the home, these will need to be paid from the mortgage proceeds. Another point is that unlike traditional mortgages, income and credit are not key drivers for Home Equity Bank's decision to lend. Of course, we are a Schedule I bank, so understanding the sources of income and pulling a credit report is necessary, but these pieces are just not critical to approval. One thing is we want to be certain that our borrowers have enough income to pay their property taxes and maintain their home insurance, as well as other obligations. But I think it's also important to add at this point that I've helped other mortgage professionals with clients who have no income use the CHIP mortgage to their advantage as well. Because mortgage payments is a significant cost, for those who may struggle in the beginning stages of their retirement, maybe they haven't accessed their pension as of yet, this product could really help a client that maybe doesn't have any income at this time.
Yeah, that's a great point, Nicole. A reverse mortgage is backed by your house and not by your income. And banks are getting stricter on verification for traditional mortgages and lines of credit. And again, to emphasize, you do not have to make payments. It has to be your primary residence, and you are responsible, as you said, to pay the taxes and for the upkeep of the property. What documentation is required, Nicole? I believe it's 2 pieces of identification, a valid homeowner's insurance, a copy of the property bill, and a copy of any mortgage statement if that is relevant. Is that correct?
Yeah, you're absolutely correct, Chris. This mortgage can be used to get equity out of a property that's free and clear or has mortgages against. And the documentation required, as you can see, is pretty low in comparison to what is required for other mortgage applications.
Yeah, that's another good important point to note, Nicole, because the borrower will have to pay off any debts that they already have against the home, such as an existing mortgage. By paying off that debt, they're immediately going to be improving their their cash flow position. And I think that's very important. You know, I think this is a very exciting product, and I really believe that it's going to be a major benefit to a wide range of Canadians on a go-forward basis.
Agree, Chris. You know, the reverse mortgage is growing, and a key reason is education. Anyone who is wondering how this could work for them should really get in touch with you, someone who can provide them with the education to understand exactly what their options are.
Yeah, thank you for that, Nicole. Obviously, it would be great to be able to help clients navigate through it, to feel comfortable with the product, and to fully understand how they can use it in their best interest. And I can be reached at the contact information there, and I'd be very happy to help people, come to a better understanding of the product, but also to understand how they could put it to best use. And I think on that note, Nicole, we're going to end it here for today, but we have plans, I believe, to go through some uses and some examples of where a reverse mortgage can really help the client base.
Yeah, sounds wonderful.
Well, I look forward to talking to you next time, and it's been a pleasure having you here today. We will chat again soon, and thank you again.
Thanks, Christopher. Take care.
Bye-bye.